Let's also welcome on board Amnish Aggarwal, who's joining in from Prabhudas Leeladhar. And it's HCL Technologies that's in the spotlight. Amnish, the revenues came in above what the street was penciling in. You've got the profits, which were down about 0.5% sequentially, pretty much in line. How have you read into the quarterly performance?
You see, numbers were good. Actually, they were a beat on our as well as the street estimates, and I think the recovery was visible across the board. And in fact, in terms of guidance, they have actually the earlier band was 3 to 5, now it is 3.5 to 5, which shows a little bit of confidence. But definitely, I think some of it is already factored in because the stock has really done well over the last say 2 3 months. And I think incrementally, if the IT recovery continues, I think this is one name which has been actually doing well over the last, at least I would say, last couple of quarters. So the outlook here remains reasonably good.
That's the word coming in on HCL Technologies. In fact, let's hear out from the management as well on what they had to say after their numbers.
There is nothing like bunching of revenue or anything like that. It's like a normal quarter where incrementally the demand was better. So services uh, overall revenue came much higher than what we expected. So that's really good fulfillment of the demand that was coming our way across all the verticals. We shared last quarter that all the verticals will grow sequentially except financial services, which was going to decline because of the State Street JV divestment. But even if you kind of exclude that, financial services has grown the strongest.
In terms of margin walk for this quarter, it it improved by 149 bps. So out of that, 52 bps improvement was contributed by software business. Services business improved by 110 basis point, which was largely driven by operating efficiencies, and 24 bps contribution came in from the favorable exchange movement. In terms of Q3, I think we are confident of delivering a good quarter, but difficult to call out. I would not like to call out the margins for the Q3 because we have given the full year guidance now, which is 18 to 19%, and we would like to stick to that.
You have to start with Reliance. And Amnish, I just want to bring the stock of Reliance out. The numbers are not great, but at 2700, do you think the stock of Reliance is already pricing in a earnings downgrade cycle? Because if Reliance is getting downgrades, it's for the second quarter on the trot now. Reliance has got downgrades. So I'm assuming that Reliance is in a 2-3 quarter earnings downgrade cycle. At 2700, is the stock pricing that in?
Yeah, hi Nikunj. If you look at last couple of quarters, I think there is no, you can say first of all upgrading earning, and I think it is quite broad based. Not only the O2C businesses, you can say showing some headwinds in terms of profitability, but if you look at retail also, retail is also not showing any encouraging numbers, and the scenario in retail overall on a broader basis, it doesn't look that rosy at this point of time. I think it is only the Geo platform which has done well, where you can see the profit growth has. So I don't rule out, you can say, as far as your pure earnings are concerned, a couple of quarters more of weakness, and I think even in the non O2C, I think 3Q trends in retail will be the key to watch out for, because the retail, the kind of investment which are going in, I think the numbers are not encouraging. So near term, yes, there could be some pressure on earnings.
Where will the leadership in the market come from? Adani stocks are getting jammed. Reliance is not doing anything. Tata Group of stocks are fully priced. HDFC Bank is down because of FI selling. Do you think the market are now bereft of leadership?
Yeah, Nikunj, what you are saying is absolutely right. But say for in case of Reliance in particular, I think today the street is not giving any value to their new energy businesses because there is very limited availability of information on that front. Similarly, if you look at, say, the market is changing the leadership from time to time. Now, if you look at the current context, yes, HDFC Bank might be witnessing some selling. There is near-term pressure due to, you can say, high LDR, which they are having. But if we dissect the market, I think, for example, the private banks are there. So there you will get pockets in the markets where there will be, I can say, leadership or those stocks will do well. Whether things will be broad-basedly, everything is going to go up at the same time, the answer is no. But I do agree that quite a lot of stocks, they are, I think, pricing in the near-term numbers of the recovery, whatever you might call.
Fair point. I'm just going to shift gears and talk about the Citi tactical call on Federal Bank. Kunal, I think, spoke about it also in terms of the technical strength. Amnish, is there reason to believe that Federal Bank now is in this cycle of outperformance? Because I was looking at the data. Outside the Nifty 50, I think Federal Bank is the only bank which has potential to make a profit of 4,000 crore. They're growing at a rate which is higher than the industry average, and NPA is also looking decent. Are we going through that phase of re-rating for Federal Bank, which has been long overdue?
You see, Federal Bank actually is quite attractively priced, and Federal Bank particularly also has now seen change in the management, due to which there are a lot of hopes on Federal Bank. I think we will have to watch the stock, say, for the next 6 to 12 months. If the, you can say, delivery of the new management is there, and if the numbers continue to be good, then there's a potential for the price to book value of Federal Bank to move up from here.
Okay, let's get in the chart check going as well. And Naresh, what's your assessment on Federal Bank?
So, Federal Bank has been one of the, say, strongest names in the private banking space in the mid-cap, small-cap side, continues to make higher tops and higher bottoms, and has a tendency to keep going through consolidation phase. So there was a phase back in the 23-24 period wherein the stock was at 140 to 170 for almost 6 to 8 and 10 months. Now we are again forming a similar range. The stock topped out at 205, went down to 180 odd levels, and now we are in this band of 180 to 205. And it's already spent 3 months here. Yesterday was an uptick, maybe due to the brokerage note, but overall the structure is still positive on the longer term side. Any dips to the zone of 190, 92 is a buying opportunity. And further breakout momentum would come on the stock about 205. Still remains a buy with a stop loss below 185.
Okay, there you have it. That's the view coming in on Federal Bank. Meantime, we'll also be tracking some of the other top brokerage notes this morning. And apart from HCL Technologies and Reliance Industries, there's Maruti, which is on HSBC's radar. They've got a buy rating with a 14,500 rupee target price, saying that the two-wheelers have grown in line with expectations, and with high inventory and a significant pickup in demand, looking unlikely, Q3 dispatches are expected to be weak. Amnish, even yesterday we were talking with some market experts who said that long term, the prospects for some of these PV players and the auto industry at large remains rather bleak. What's your assessment?
You see, I don't think the long term should be an issue, but if you look at, say, last particularly 4 or 5 months in particular, the PV segment has shown tepid volumes. And all eyes are actually on 3Q, your festival and you can say wedding season demand, that whether it can, you can say, take the things out from here. The second factor particularly to look out for here would be that this entire year, I think, in particular on the PV side, we are today having Hyundai IPO, which is opening up. In terms of P multiple, not a very big difference between Maruti and I would say your Hyundai. But the main thing is that if you look at, say, Maruti, the rural demand is yet to pick up. They are under-indexed in the SUV segment, so that is a plus for them. But if you look at, say, last 2-3 year kind of trends, the PVs and overall PVs have done really well. Autos, two-wheelers have actually caught up in the last 2-3 quarters. But I think it is not that the things are going to, you can say, become slow over the medium term or say couple of years viewpoint. I think it is just a corrective phase after very sharp growth for last couple of years in particular. So I think if there is weakness in stocks due to this, I think one should be looking at buying the auto stocks.
Stay on with us, and even with the interest building with Chinese equities, the investor community doesn't seem confident around that rally being sustainable. Keeping that in mind, it seems like a lot of analysts now continue to remain bullish on India in the long term, and similar is the case with Macquarie. However, they have a rather cautious stance on Indian financials as a space. Why is that? Let's take it across to Varun to understand that brokerage rationale. Varun.
Well, so Macquarie has done a roadshow in EU, and they met around 25 investors last week. What they figured out is the fund managers, especially the global emerging market fund managers, they are increasing their weight on China and reducing their overweight stance on India. But this is only for short term, because they say that in short term you can see rally in India, and they are trying to play this rally. For China, the long-term structural story, it is very difficult to take a call on the long-term structural story of China, although the long-term structural story of India is better than China. That is what they say. There are near-term headwinds for India, especially the slowing auto sales, the overall tax collection, the credit growth. These are some of the near-term headwinds, but the long-term story of India is still intact. For banks and NBFCs, they are underweight in the near term. ICICI Bank, HDFC Bank, the investors are a little bit nervous, and also they are a little bit concerned about Bajaj Finance. Although for Shriram Finance, they are overweight. In PSU banks, the interest was very less, although there was interest in SBI, and also for Paytm, there was less interest, and for PB Fintech, investors were not much happy about their hospital investment foray. So overall, if you look at this roadshow, fund managers are a little bit getting overweight on China. They are increasing their overweight stance on China, but for short term and long term, India story is still intact.
Well, for the moment, if I look at China, China is actually down. And it's not really gone gaga after that Golden Week holiday. It opened up, had a couple of good days, and then closer to 3,000, 3,200, it really seems to be making a base. You have to also recognize that Chinese markets are not bombed out now. 25% higher for a market, that means that undervaluation and that arbitrage which was there, that already is behind us now. And then you go to compare India based on where the growth is, where the corporate governance is, where the disclosure are, what the political stability is. For China, yes, the deep bounce has come, it was oversold, it was under-owned, but after that there are issues which are systemic, there are issues which are chronic, and there are challenges which are real about the economy and about the way entrepreneurship in that country is moving, and what about government interference. If you add that back in, China will not be a very attractive proposition for long-term investors if you compare that with India. That's my sense. Amnish, what's your sense on Adani Group of companies? A couple of Adani Group of companies in last 3 months have done a QIP, but frankly in this market, last couple of months, Adani Group of companies have done nothing special.
Nikunj, you are asking in terms of stock price? Or,
yes. I mean, in general, I'm talking about Adani Enterprise, Adani Green, Adani Power.
Okay. You see, if you look at, say, last couple of months or quarters, I think Adani Group is actually looking at two things. First of all, you might have seen a couple of companies have actually gone in for their QIPs. So they are looking at, say, first of all, bolstering their balance sheets. So that is one trend which is clearly visible. And I think Adani Enterprise also came out with NCD, which means that they are even looking at broad basing their entire debt profile to have more, you can say, more broad-based retail participation. Now, when it comes to the stock price now, if you look at, say, Adani Ports or Ambuja Cement or some of their, you can say, other energy companies. So if you look at, say, last 6 to 8 months, these stocks had rallied very sharply. The returns were phenomenal. So after that, I think they are more or less, I would say, in the corrective phase. So there is no big incremental announcement which is also coming. And I think these kinds of, you can say, phases comes in these stocks. So the long-term outlook on many of these companies, I think that remains positive. In the near term, I think the corrections can continue coming in from time to time.
Okay. Naresh, Adani Group of stocks, where they are headed?
So for now, they're consolidating, waiting for, say, a price check to confirm a trend. So if you look at Adani Enterprises, the main name, the stock is around the 3,100 mark for almost the last 10 months. It's not seen much of a spike beyond this. We saw a spike on exit poll day, and then we saw a dip to 2,800 to 3,000 on election day. But post that, we've just been over there for the last almost 10 months. Apart from those 4 days of volatility, the stock has gone nowhere. So once it starts sustaining, say, below 2,900 or above 3,250, that's when you understand that a trend change has taken place. For now, it just looks like a consolidation phase going on. And the charts are very similar for most of the other names. You could pick up Adani Green or Adani Ports. Even the smaller names, we are seeing more sideways action rather than trending down or trending up action.
Okay, fair enough. That's the view coming in. In the meantime, just watching out then for some of the other newsmakers that we will be tracking in today's trading day. And of course, there's a whole host of them. You've got an angel one, you've got the Q2 numbers with the revenues that have shot up about 44%. The net profits as well have grown and margins have come in steady. Some of those pharma stocks like Dr. Reddy's as well as Zydus. Zydus has, along with ICMR, has initiated phase 2 proof of concept with some of the trials of the drugs, and you've got Ola Electric as well. They have got a market share. They've consolidated their market share, according to them, at about 34%. And you've also got something like an IRCTC, where the Rail Neer plant at Andhra Pradesh has commenced the commercial production of Rail Neer. So these are some of the newsmakers as well that we'll be tracking. But Amnish, wanted to get in your thoughts then with the Hyundai IPO and what we've been seeing within the entire space of autos. What's the outlook on Ola Electric? It has been in the news of late as well.
The first one on Hyundai IPO, I think it's the second largest PV maker in India. And if you look at the scale, 60 to 70,000 crores of top line, margins ahead of Maruti, return ratios are also quite strong for them. So to some extent, I think the company looks good. The only thing is that this year there's a 1% increase in royalty. That is one. And the second thing is that they had taken one-time dividend last year. So there could be some impact on other income. So with the capacity increase now in the pipeline, new EV models which are being planned, I think if you look at say medium to long term, the issue continues to look attractive. But given the fact that it is coming at around say I think 25, 26 times trailing, so it's not a very cheap IPO. But I think for the investors who are ready to take say medium to long term viewpoint, they will definitely end up making money. So how much could be listing gains and all is something which is very difficult to gauge at this point of time. Now, secondly, on Ola, I think it has been more in the negative news in the last month and a half with regards to, you can say, problem with the quality issues. And if you look at, say, past 6 to 7 months in particular, their market share on the EV side has been coming off because players like TVS, players like, you can say, Bajaj or some others. So they have been actually coming up, and all these, you can say, traditional two-wheeler OEM. So I think Ola, the stock price has corrected simply because I think it's not going to be that easy a ride in my view, because Street was mainly banking upon that they are going to be backwardly integrated, their battery costs, they will come down. But having said that, I think it's going to be a fierce battle even in, among the two-wheelers. Players like your TVS, Bajaj, Hero also, I think, upping the ante in the electric side. So I think it would be more like a wait and watch for the next 2-3 quarters at how the company fares in terms of not only the market share, but the absolute volumes, because absolute volumes have to grow for Ola to actually start making a bigger dent into the overall two-wheeler market, and also some which will show some path to profitability in the next couple of weeks.
Let's compare a Maruti and a Hyundai. That is what the markets are comparing. Which is a better one? Maruti, which is the market leader, or Hyundai, which is number 2, has potential to become number 1. If one has to choose between Hyundai and Maruti, which is the better one?
And it is a very tough choice because you see, we can't compare because the market share of Maruti is roughly 3 times that of Hyundai. Can Hyundai be a market leader in India? I think the simplistic answer is no. It doesn't look likely. The kind of, you can say, because it's a multi-player market now, so all the biggies globally are there, and many of them even might come in future. So market leadership is one which is ruled out. That is one. The secondly, their sales mix is superior in comparison to Maruti. For example, the SUV mix for them is far superior. I think it's around 45-48%. So that is superior. In terms of margins, also they are better in terms of margins. They are superior than Maruti. Royalty now, I think more or less it will be on the similar lines. If you look at say productivity per employee and all, I think in some of these parameters, Hyundai scores over Maruti. So that's what I said, that there is no big difference as far as your profitability metrics are concerned. If we have to choose between the two, then I think it's going to be a tough choice. But in the near term, like for example, Hyundai is a new stock, you get one more stock on the auto PV side, which will be listed. So there will be some excitement. And given the fact that the base of this company is small, if the new launches are a success, then in the, I would say over the next few years, there are chances that it might actually pick up pace and even grow ahead of Maruti. So that can't be ruled out. I think in the near term, the excitement could be more about Hyundai. But yes, Maruti also looks reasonably attractive at this point of time because the stock has been sideways from quite some time.
So my next question on this Hyundai IPO is like Tata Motors got re-rated because of JLR comeback and because of their focus in EVs. Mahindra and Mahindra got re-rated because of their focus in SUV, where they have more than 50%, 45% market share now. What about Hyundai's product line independently? Can they do something which is unique and special, which could add to their terminal value going forward?
You see, very difficult to say and answer this question because when it comes to Maruti, Maruti is known to give, you can say, mileage to consumers. It is known to give, you can say, except say some of the models, it's more like a value for money focused company. M&M, I think the re-rating happened because it was transformed. Because the way your XUV, they did well, then XUV 700 came. Not much happening on the EV side over there. Now, if you look at, say, predominantly Hyundai, can they do anything which is very different? I think there's a scope for them to premiumize. There's a scope for them to increase their presence on the EV side. But will it be something which is very radically different? I don't think there is any clear visibility or anything which the company has given clarity of. Because at the end of the day, you see, a Tesla can do something which is very different, or a company like M&M, if you look at the last 4 or 5 years, it has undertaken a lot of transformation. But in case of Hyundai, I think they have got a lot of products in their stable globally. They can launch much bigger, much better vehicles over there. So that is something which can come. But is this something which is clearly on the horizon, which can, I think, change the fortunes or shape the company? I think only time will tell. We will have to wait and watch for this.
What about your outlook when it comes to FMCG? A whole host of numbers that will be declared later this week, including a Nestle India. So within the FMCG basket, Amnish, where is it that you're likely to see positive surprises when it comes to earnings? Are there any particular counters you're watching out for?
You see, I am not very gung-ho on FMCG companies from quite some time. And I think if you look at, say, last few weeks, many of these stocks have corrected by 8 to 10%. Because I think the market is factoring in too much of recovery, margin expansion, or all the positive things. So I think we could witness some bit of, you can say, positive news which can come on the rural demand side. But having said that, I am not very gung-ho on many of these names because two things. First of all, inflation is inching up, more so food inflation. The impact of the duty on the edible oils, vegetables and all, that will be fully reflected. And if the food inflation is there, the growth rates don't pick up much. And given the fact that many raw material prices are already inching up, so we are not likely to witness any dramatic moves as far as the profitability of these stocks are concerned. And many of these companies, particularly over the last 6 months, they have got re-rated massively on hopes. So I would be very cautious on consumer names, particularly FMCG names at this point of time. And maybe I think once the results are out there and there is more clarity, there could be some sort of, you can say, bottom fishing which might happen. But at this point of time, I would be keeping my fingers crossed.
Yeah, absolutely. And especially with companies like Dabur coming out with their week quarterly update, you've already seen the stock damage, about almost 14% gone for Dabur in just the last 1 month alone. But Amnish, so great having you on the show. Thanks as always for taking the time out.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 1,865 to rupees 1,960 per equity share of face value of rupees 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.